Hi mate, so you're looking at usdjpy, yeah? So what you want to do is so it's up to you mate if you want to follow these rules. So this is pretty much what I follow. So you can write them down or take a picture of them if you want. Okay, so they don't have to be all there, but obviously the more that you can get, obviously the better. Okay, so your chart would look like this, yeah? So the first thing that you need to be doing is looking at the number one top-down analysis, the weekly, daily, and the 4 hour. I don't really bother with the weekly, to be honest. So the daily, what's the overall trend direction? Yeah, it's obviously massively at the moment from here onwards. So from about 7 months ago, we're pushing upwards. So this could be a bit of indecision here, because if it breaks past this, then we're looking at pushing new highs. If it doesn't break that, then I think it has actually. Yeah, it's so the body is closed above this body, but the wick hasn't. So yeah, ideally you need to be looking at the bodies, to be honest. So you could say that's broken there, but it's not clear. So for that reason, I wouldn't trade this. Yeah, but let's go with it anyway for now. So daily, then the 4 hour. So ideally, over the overall trend, we're looking at upwards. Yeah. So we got lows, highs, lower high, higher high, and so forth. Yeah. It's pushing up. Yeah. So this could possibly now create a new high. Yeah. So it has also though broken structure here. Yes, that's the one of the things that you need to be looking at. So let's take all that away. Okay, so that's pretty much number one, just to see the overall trend direction. Just like when you're leaving home, you need to set your sat nav to know where your destination is. Yeah. So obviously, when we go on our little travel on our road, we need to know which way the road is going. Yeah. Just like leaving home in the car, you go straight forward or left, right, or backwards or whatever. So it's very similar to trading. You need to have an end goal destination. Okay, so obviously if you know where you're going, then you leave the house knowing where you need to go, and it's the same in Forex. You need to know where your end position is going to be. Okay, so that's that. So number two would be, where's the order block? Okay, so the IC candle. So on the 4 hour, what we've got is this one here. Okay, this is the last up before the big down move, and now it's coming back up to this area to mitigate out of this position. Okay, so I think so far it's done it perfectly. Here's the orange line on the open of the candle, this green candle. Yeah, open and 50%. Okay, so you take your fib from the body high to body low. Okay, and you mark out 50%, obviously 50% of the candle. Yeah, you can mostly do it with your eye, but until you get used to it, just do it with a fib. Yeah, so 50% is obviously 50% of the candle. So then you can delete that fib. Okay, so what I do then is I mark out rectangle, that area. Okay, again, it's the same as how I do try. So I don't really like playing off just a single entry line. I'd rather work off zones. Yeah, so a lot of people go for entry and a lot of people go for 50%. Okay, so if you'd gone for 50%, most probably you would have not been triggered into that there. But if you'd gone for entry, you would have been triggered in, and obviously it's rejected now. Yeah. So this would be my settings, an IC markup area. Yeah. So I can now delete my orange lines. So you want to make your chart as clean as possible. So I'm just looking at yours. It's very clean, mate. Really. Yeah. So just so you know, when you go back to it, you don't want to be too confused, sort of thing. But yeah, that's the 4 hour. Okay. And obviously, where is price and what is price doing? Okay. So what that basically means is price coming back to fill in the candles, or is it pretty much just pushing up and pushing up and pushing up and leaving a lot of imbalance? Yeah, I think you know what imbalance is. I think you've marked out. You've marked out as an imbalance. I think you have on the 1 hour. Let's up to the 1 hour. Yeah, I think you had this, didn't you? You marked this out, this area. If not, that's your imbalance there, mate. Okay. So what imbalance is just where the wick is naked, basically. The body of the candle. So there's wick either side. There's nothing being filled. Yeah. So forex is just like building a house. You got the side of the house. You got the roof, but you also need obviously another side to the house, and it's the same in trading. So this here is one side, and now this has been filled with this side here. Okay, so now it's balanced. Yeah, so now there's no more IPA there, improper price action, which is another word for imbalance. So before this happened, there was imbalance there, and that just makes it more probable for the candles to come up to this area to fill this in, because it always has to be balanced and filled. Yeah, so if there was, we were looking here on the purple zone. Yeah, if there was another one down here, which one do you take? So let's say there's another IC candle down here somewhere. There isn't, but just say for example there was. Which one do you go for? It's just a probability game. So it's more likely that the candle, the candle price action, is going to come up to here to fill this imbalance and mitigate out of this position, rather than this one. It can do, don't get me wrong. Yeah, but then what will happen, it'll drop and then possibly come back up and mitigate out of this one. So that's where patience comes in. You really have to wait for the right position. Yeah, and obviously if you were taking a trade from there, your stop loss would be above here. So that's what, 28 pips. Yeah, whereas if we took an entry from sort of this area on the purple, what's your stop loss now? 6 or 8 pips, yeah, 7 pips, say. Okay, so obviously that's then there for risk management. Yeah, you're obviously your risk to reward then is a lot better. So for example, short, if we said for example we took it from there and then maybe one from there. So let's see what the difference is. So your TP, your take profit, ideally should be previous lows. Okay, that's your safe bet. So down here, previous lows. Yeah, so this was just shy of 3 to 1. Okay, so let's work out this one. This now would have been, that one was a 12 to 1. Okay, so if you're risking 2% times 12, this would have, if it comes down, it looks like it's going to, if it comes down to there, you've just grown your account by 24%. So when people, you and me and other people, kick off about losing 1%, 1%, 1%, 1%, if you take 10 trades, and they're all 1% risk, and this is where risk management is very important, and they all lose, unfortunately, you're down minus 10%, right? Because you've taken 10 trades at 1% risk each one, so 10% down on the account balance. But again, going back to risk management, that's why it's key to get this right, because if this comes in, we are now up 24% from this one trade, minus your 10% loss. So overall account profit would be 14% growth. Yeah, so this is what we're trying to say to people. You can take 10 trades and then you get one right and it does that for you, 24% growth. So this I massively struggled with. Yeah, I was thinking loss, a loss, a loss, a loss, a loss. And it does happen, you know, even the educators, they lose as well, so it does happen. So let's just leave that there. Okay, so identify BOS, so break of structure. Yeah, so we just got break of structure here. Okay, so that identifies it's wanting to push down. Yeah, so we're now in a bearish market, so we're looking to push down. Yeah, because it's broken structure. If this wanted to carry upwards, then obviously we'd be creating new highs, which at the moment we've not. Okay, so we've broken structure here. Sometimes if it's very, very close, you are better off going to the line, okay? And obviously you can see it's still broken on the line chart, yeah? Because candles and wicks, all it is just, what wicks is just a distraction from true price action. Okay, so we've done 1, 2, 3, 4, 5. What does price want to do next? Retract or fill? So this is pretty much, this should be a bit further down. So this is when you're taking a trade, really. Yeah. So what is price trying to do at the moment? So it is rejecting. We can see it's rejecting. Yeah. So work off typically the 4 hour and the 1 hour to get your chart work up, and then break it down for entries on the 5, 3, or the 1. Okay. So again, drop it down to the 1 minute. I still wouldn't be taking anything here. No. Like maybe might have got in here somewhere if it allowed me to. Yeah, because it has broken this small structure here. Okay, so and if I was getting into this here now, I'd be getting, let's say, how's that before down? This one here. Okay, so the same principle applies. So this green one was the last up before the down move. Okay, so this came back into it here, sorry. This was the last up before the down move. This wick came back into it, or the green one actually, any one of these. Yeah, so it's just breaking it down to smaller time frames and using the same analysis. So that candle there, last up before the down, yeah, it's come back and then pushed down. Okay, so let's go off that. Okay, so if our entry was around here, our stop loss, this is how tight you can get a stop loss. Yeah, just above these highs here now, your stop loss is now 5 pips. Okay, so if we take it back to, let's go down to there. Yeah, this is where the other one was. This is now what, 30 to 1? 15 to 1. Okay, so if we were risking 2% on this, we'd be up about 29%, 30% growth. Yeah, so this is where you get your tighter stop losses. But for now, this is totally fine. This is how I trade quite often if I'm not too sure about the trade. Yeah, so you don't have to make it really tight. You know, it's not the end of the world. But if you're using this, if you're using a big stop loss even, just make sure your risk management is correct, because 1% of that or 1% of that is the same if you worked it out properly on the calculator. Yeah, so just make sure you're using proper risk management, and it looks like it's trying to push. It's just, a lot of this is just common sense. You can just read market structure, what it's trying to do. Yeah, it's obviously it's rejected once, twice at the moment. So here we call this distribution. Yeah, so if it wanted to obviously plow through, it would have gone through. Yeah. So this is quite nice. This is good for what we're looking at. So we're looking at a little bit of a sideways consolidation and then distribution, and then it'll push down. Okay, so it does hover in this area for a while. Let's delete all this. So does the candle close below or above the order block? Okay, so did the wick try and push out and try and take other people out? So the order block we know is in our purple zone. Yeah, so did any of these candles so far close above the purple? No, it's still in our zone, so it's still good to take. Yeah, take the trade. Yeah, so if it closed above and above again and above again and above, obviously it would have hit your stop loss, but that shows it's bullish. It wants to push up. Okay, so this again, don't jump into it too soon. Just because it's rejected off there, hold off the trigger. I've been here many a times. I've got in here and it's just, all this was a pullback and it's pushed through again. Just hold off, hold off, hold off. Like now it's trying to pull up again. So I would imagine it's trying to get me into here, this up candle, and it may well start dropping now. So yeah, it's trying to reject off that area. Okay, so what else we got? Check the fibs. Yeah, so fib levels. Fib levels is are very accurate. Yeah, so your fibs, you can go wick to wick. Okay, so from this high, so this is the previous high. Okay, so you can either go from here or here. Let's just see which one really fits, to be honest. Okay, so this doesn't quite fit, neither does that one. Doesn't always work out, don't worry about it. You know, it's just above the 89%, so it's not the worst thing. But where the 78.6 lies is bang on 50% of the IPA, which is good. Okay, so just sometimes you can have it there or have it there. You can just pretty much play with it at times and see whichever fits best, really. But obviously, you know, if it's like down here, then it's not going to work. Yeah, it's, again, just going back to common sense. So fibs, DOT trend, so we've spoken about that. Imbalance we found, that's been filled. So the POI, so point of interest, so I've covered that, like the sat nav, you know, this is where your previous lows are, so we'll be targeting. Don't go like greedy, don't go all the way down there, just shy. Maybe your first one will be down here because this is the last down before the up move. Yeah, so you could mitigate out of here first and then reject. It's up to you if you want to wait. So in my experience, I would typically think it's going to come down to here, pull back maybe and reject, and then keep on pushing down. Okay, so but it's just a waiting game. At the moment, it's pushing up. And then yeah, if you were pretty very sure, you could be targeting these lows down here. Yeah. Okay, so engulfing candle. Yeah, this candle here is massively engulfed. So this is the last up before the down move. This is now on the 1 hour, remember, not the 4 hour. So this is an engulfing candle here. That's the imbalance. Yeah, and then number 14, does the IC take out liquidity? Okay, so does this candle take out liquidity? Not really. Yeah, so if it does, it just makes it more probable again. Does the particular move break market structure? Yes, this does. Yes, so this here, this last up, then down, broke structure. Okay, so this means, again, it's more probable for the candles to come back into this area to mitigate out of this zone, okay, or out of this candle. So, does the market suit structure? That's just pretty much a generic sort of question. You know, what's going on with the market, market? Yeah, does it? It's pretty much saying, does it all fit in together? Is it one piece of jigsaw missing or so forth? You can get a few jigsaw pieces missing, but these are, I guess, these are your jigsaw pieces here. Yeah, you just need to take quite a fair bit of these and just make it work, but don't force it. You know, please don't force it. As we go, signature move. This is not a signature move. I won't cover that now, but signature moves are good. A Wyckoff, so you've got a Wyckoff on a buy and a Wyckoff on a sell. I definitely won't cover that now again because it's very long-winded. But yeah, we'll do that another time. check higher time frames. So if you're looking on the 1 hour, check the 2 above, so 2 hour and the 4 hour. If you're on the 30-minute, obviously go up to, so 1 and 2 hours. Yeah, just to check the bigger picture. 20s, 50s and 80s. So the banks absolutely love playing with 20s, 50s and 80s. Okay, so I mean the numbers on the right hand side here, so 110.50. Yeah, so that's like a key sort of zone area for the banks. They like playing with 20s. Yeah, so zeros, 20s, 50s and 80s. Yeah, so that's the banks like playing with them areas. And then 22, just don't be greedy. Yeah, if you put a trade on from here, and now it looks like it's playing out quite nice for us. Yeah, so, and it comes down to here, and you're, let's say, I don't know, 380 quid in profit, take some money off the table. Yeah, so what I would typically do is I take off about 70-80% of that 380 quid, yeah, and let the rest run out. Yeah, and see, it's just more so for your psychology, your analysis and your confidence. Yeah, so if you had a lot size on, you'd close 0.8 of it, and then you'd leave 0.20 run, yeah, and to see, and obviously your stop loss would be deep into stop profit. Yeah, so if the market did come down to here and then come and did this, you'd be taken out but still in profit. Yeah, so but at least we've taken a fair chunk of that 380 quid off the table first. Yeah, that's secured, because that's the main object. Pay yourself, secure the bag, and let the rest run. Yeah, in profit. Yeah, so that's pretty much how I do it. We'll do some live sessions. I'm going to do one tomorrow. Yeah, it seems fairly simple, but as soon as you start to get this and understand it and how a market moves, then it's literally the world's your oyster, as they say. So yeah, I hope that helps, mate. I'll send it over to you now.